right, we are live recording today, and welcome to Canopy Mortgage Podcast, A Better Way. I'm your host, McKay, Chief Revenue Officer here, and today we have joining us Ken McKee. Ken, if you want to take a minute, tell us a little bit about who Ken McKee is. We're excited to have you here today.
Right on. Thanks for having me on. It's good to be here, and this is fun. I love doing stuff like this. So I'm a producing branch manager in right outside of Sacramento, California, in Roseville, California. And, got 3 kids, 12, 14, 16, married to my wife now 17 years. But I've been in the mortgage business 19 years, done a little bit of everything, worked for the big, bad countrywide bank and then brokered, and then worked with a number of different private mortgage banks, over the years. And now I've been here for, it's crazy, going on 3 years at Canopy.
Very, very cool. What are your hobbies? What's your favorite thing to do other than write loans all the time?
I used to do triathlons, and then I couldn't because of injuries. And so I do jujitsu. So I've been doing jujitsu for like a year and a half, with the caveat that I've been out for like the last few months because I had a partial knee replacement in July, and I had a total hip replacement in like 6 weeks ago. So I'm hoping to get back on the mats and roll, February or so. Who knows? Well, but I think I love to do it. It's amazing.
Okay. So a triathlon is harder on the body than jujitsu is what I'm understanding then.
Depending who you roll with, I mean, just years of running and repeated, that kind of stuff just wore down my knee. And, but yeah, no, you can roll. I rolled injured, like not injured like that. Like I rolled with my bad knee and my bad hip and would do fine. It's just knowing when to tap, not being that I'm 51 years old, McKay. I'm not going to go with a 26-year-old hardcore, weightlifter and just go all out,
Got it. Cool. Well, no, that's, I'm glad. We want you here at least another 51 years. So
there you go.
Here you go, Ken McKee. Here's my question for you. How did you get introduced or into the mortgage industry? One of my favorite questions. I always love to hear.
And it's a fun one. So I used to be in voice and data sales in the Silicon Valley, and I hired it. So I was a man at first. I was a sales guy, and I had a territory with 12 guys that worked with my team, and I hired a guy who is still in the tech industry. In fact, he does all the tech purchasing for Kaiser, like globally. And but he left. He never did really was able to sell the intangible, but he left and he got into the mortgage business, and he worked for Countrywide Full Spectrum Lending. And we used to trade. This is around 2001, 2002. We were trading W-2s and trading pay statements. Like who's making more. His income was going up, and mine was going down. And so I'm like, hey, can you give me an interview? And he goes, yeah, there's a branch right in your town, and right in Roseville. So I went and met this lady, and she brought me on. And the weirdest thing, I was like, what do we charge people? What kind of rates do you give if you don't pay 3 points? And she was like, what are you talking about? They're all 3 points. I'm like, why would you ever do that? And I was like, because I wouldn't pay 3 points. And she's like, well, our clients are not your clients. And that's when I realized I got to do something else. But that was my intro to the business. Hired a guy who worked for me who later split and went to a better way. No pun intended.
Very cool. So, and it sounds like, I mean, based on where you're at today, you never really looked back. You've been a pioneer in this industry kind of once you were introduced to it, all in.
Oh, I would never do anything else. And I never thought I would do anything else after it. I just told my wife for the first year, it's going to be like I'm getting my MBA. I'm literally just going to work as much as I have to. Because I was chicken. I didn't want to have to learn how to get loans and learn how to do loans at the same time. So I went somewhere where there were loans coming in through like lowermybills.com, that kind of stuff, and just answer the phone. And it was horrible. But I learned a lot about loans. It was good.
Man, lower my bills. That puts me back a few years.
Right.
That's where I cut my teeth in the industry, was calling lower my bills leads at a small little brokerage. So I can relate to those good old days.
Yep.
So Ken, tell me a little more kind of about your business. You said you're a branch manager. What do you primarily do? Do you buy leads? Do you work referral partners? What's kind of your bread and butter or your secret sauce? What do you focus on to build your business?
Yeah, I'm 100% referral. I don't buy anything. I won't I won't pay for realtors advertising either. It just never has worked out for me. Trying to pay for someone's Zillow or doing Zillow. I think when you look at like, I'm really relationship based, and all the buying leads and stuff. It's just, for me, it's like, it's a transactional thing that there's no trust there, and the conversion rate's really low. And so like my main thing is just to bring extreme value to our referral partners, like our realtors, so that they would never want to go anywhere else to hand over a mortgage to somebody. I want them to value us so deeply that they sell us to the person they're referring over.
So let me dig a little deeper on that, because I love the word you used, extreme value. What do you do that gives a realtor extreme value? How do you differentiate yourself from the competition out there?
Right. So the average loan officer is going to say something like, I'm available 24/7. I close on time. I'll call you back. Like, those are all the things that are like, to me, they're the barriers to entry. Like, you have to do that. Like, we have been in an appreciating market, except for maybe a little bit in 2022. We've been in an appreciating home market since 2011, 2012, right? And so my goal is to help our client get their first offer accepted. If I can do that, or drastically limit the number of offers they have to make, then I'm going to save them a lot of frustration and time. I'm going to save the realtor a ton of time and frustration, and I'm going to allow them to do more. So our big pitch, the value that we bring, is that we're going to close in 14 days. We pre-underwrite everyone, so you get a conditional approval ahead of time, and that's something that, because we're here and you guys foster that and want us to do that, it allows us to close really, really fast. And then because of NANO, and also just the process that we have, like I tell the realtors that we work with and the listing agents that I call that we're going to disclose the loan, lock the loan, order the appraisal, and submit the file back to underwriting all on day one. And by doing that, we go in with like a 14-day close of escrow with no loan contingency, like a 7-day appraisal contingency. And that gives our buyers the terms to win against they're very competitive, right? So like, if I'm talking to a realtor, I just tell the realtor, it depends on who I'm talking to, but like, most realtors just want to like be able to make more money and spend more time with their family if they can. So I tell them, you're going to make more money and you're going to have more time to spend with your family if you work with me over any other loan officer you can work with.
Love that. Something Aaron Brown, CEO of our company, has often said, like, everyone is always in tune to one radio station, WIIFM. What's in it for me? Yeah. And I love that you're just hitting the realtor right on. Like, hey, you want to spend more time with your family doing things you love? Yeah, I'm gonna show you how to do that, and you'll close quicker, and it'll be more money in your pocket. So 100%. Love that. Great value add. So looking at the current market, it's, at least in the years that I've been here, and I want to say this and put a positive spin on it, because I feel like there's always growth opportunities in a downward market. But what are some of the biggest challenges you've faced in 2023, and consequently, what have you done to help overcome those challenges? Yeah, so I would say, like, it's not going to be, I'm not going to tell you that it's lack of inventory. I'm not going to tell you it's less home sales before. I'm not going to tell you it's the realtors that are not performing and doing as many deals as they were doing before. No, they're not helping as many families. I'm going to tell you the thing that was the biggest struggle for me is me. Just putting my head in the sand and just not taking massive action as soon as I had to. That was the number one thing. And so what we've done to stop that is we've done accountability groups. Like, we have people at the branch. So I run a small branch. It's me. There's 6 loan officers, and we'll do accountability. So like, well, I'll just tell Kristen, who's usually in the office right next to me, hey, stop what you're doing for an hour. We're going to call realtors, and we'll just make an hour. Just take action right now. So the best way to take action is just to take action. Love that. You're just diving in and doing it, instead of creating a quote plan like so many do, and then that plan goes dusty and dark, and no one ever even really picks it back up or looks at it. So, well, and so also, what I'll tell, when we call realtors, we ask them the same question, like, what's your biggest frustration in the market? And like, a lot of them will say lack of inventory, buyers are not really good, the affordability is all-time low. And so if I ask them, okay, tell me, let's break that down a bit more and tell me
what about lack of inventory is a problem? Well, there's 5 people trying to make an offer on every home. Okay, so what's the problem with that? Well, I'm not getting my offers accepted. Okay, so if you got like 85% of all your first time offers accepted, would you still be telling me there's a lack of inventory? There's a problem there? No. Okay, cool. Can I show you how we do that? Yeah. And so that's like just reframing is another way we've gotten out of the issues that we're in by reframing to anyone we're talking to, whether it's a buyer or a referral partner or a past client who's going to refer someone to. It's like, if you think it's a problem that rates are 8% or 7.5%, kind of like where they are now, if you think that's a problem and you're a client of mine and I ask you to refer someone to me, you're not going to refer somebody. But if I reframe it and say like, wow, like there's a lot of people that for no fault of their own had a really hard time during COVID. They want, maybe it's a family, one spouse lost a job, something happened, they got into credit card debt and now they're really underwater. Like we have been helping people save like $1,000 or more a month by doing that right now in this rate environment. Do you know anyone that I should be talking to? And then like, that's just reframing it, right? So like helping people see it a different way.
Love that. So one of the questions that I think realtors as well as loan officers get constantly, and I love your take on this, or like to hear your take on it. When do you think the market's going to quote turn? When will rates get better?
I just sent out a video this morning to realtors and one to my entire database. So around Thanksgiving and being grateful for them, but also about what the Fed is doing. I have gotten so exhausted and disappointed by being let down that rates were not lower than where they are that I stopped caring about it. And so like, I don't think it matters that rates are lower. I think it matters that we can talk and have a better message to people right now.
Right.
Does that make sense? Like I without a doubt will have a much better 2024 than 2023, whether or not rates go down or not, because my mindset's different than it was at the beginning of this year.
I love it.
You know what I mean?
Yep.
So, but the other, if you want me to really answer the question, I mean, I'm very encouraged that the Fed has stopped raising the Fed funds rate. And now there's the Fed futures traders are now pricing in like 30% chance that we're going to decrease rates by March. I think it's 85% by May, 100% by June. So that to me is encouraging. And then Barry Habib was talking the other day about that not only will they lower the Fed funds rate, when they do that, they're going to stop the quantitative tightening. And so they're going to stop letting the money roll off their books, which creates more bond to be bought, right? More inventory. So by them keeping it on their books, it decreases the available amount of mortgage-backed securities. So that should do just that in and of itself should lower rates. So I don't know, but I don't care when it's going to happen, but I'll take it when it comes.
Love it.
Yeah.
I love that your plan is not waiting for rates to get low is just not a plan in this market and in this environment. You got to go out and get it. And you're one that is thriving in a quote down market. So one other question that I have, I've always admired your ability to lead people. I feel like you're a great leader, a really good example of what a leader is and emulates. What do you do to add value to your loan officers? What types of things do you do? You talked about the meeting and acting now, making some calls. What other value adds do you give to your loan officer as a branch manager?
Well, first of all, let me know whether you want me to Venmo you or PayPal you for that. But I appreciate it, man. I mean, I want to give to them what I either got that helped me or what I didn't get that would have helped me. And so when we bring somebody on, we do coaching. So we have coaching on one Tuesday at 10 o'clock in the morning. I coach 3 of the loan officers that are more new. And then on the next Thursday or next Tuesday at 10 o'clock in the morning, I do 3 more that are more experienced. So I put them in groups that are kind of appropriate, right? And so this first group of the new ones, we're talking about building your database. We're talking about how to call on realtors, bringing value to realtors. So we're doing all those things that no one taught me the first few years that I was in the business. And so we do coaching. I love listening to a podcast. I listen to podcasts every day. whether it could be Jocko, it could be mortgage related, it could be deeper or bigger pockets or something like that. So I will send out one that stood out to me, and I try to do at least one short one a week and one medium sized one, like an hour long, so that they can get some value out of that. I really think that with all the podcasts that are out there in the mortgage industry, you could listen to like a podcast a week, and it's almost like coaching used to be. You're learning. You're just maybe not getting the accountability. So then I will just reach out like once a week on the off week. If I'm not coaching, say, group A on the off week, I'll reach out to them and just check in, see how they're doing, anything you need from me. But I don't spend a ton of time on it. The time that I do spend, I want to give an hour's worth of really good valuable with some actionable items that they need to take care of, and then remind them the next week, hey man, how you doing on that? Just check in with them, a little accountability.
I love that. So many people are great at the initial coaching, but it's that second part that you said, the accountability and really holding individuals' feet to the fire. To me, at least for me personally, I need that accountability piece, or out of sight, out of mind. So
100%. Yep.
Well, Ken, thank you so much for taking time out of your busy schedule, spending it here with me today. And boy, what a great opportunity it would be to work with Ken. Certainly, he's a great leader, leads by example, and one that all of us can take a lot from to learn and to grow. So, thanks for your time today, Ken. Really appreciate you coming on the show.
Thanks, McKay. It's my pleasure, man.
Okay.
Bye.
Bye-bye.